What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Digital World Acquisition Corp, ticker symbol DWAC, on a variety of time frames in anticipation of tomorrow's trading day, Monday, January 29th. So DWAC on Friday up pretty big, up 9.37%. That's $3.27 for a $37 stock as of right now, which is relatively volatile day here. Here on the 1 minute chart, again, we're going to look at this on a variety of time frames, get the most context possible, and lay out some bullish and bearish scenarios here for tomorrow. Now this, of course, being the 1 minute chart, I think we can get some more context here by looking at the 5 minute intraday, because I want to make sure you guys are aware of something here on DWAC. So, see this volume? See the biggest move of the day? Of course, happened off the open, testing $40.50 a share. See where by far the largest volume occurred on the day? During that pump, during those 3 5-minute candles, those 3 5-minute candles on not long after the open on that big, early to mid-morning pump there. When we're looking at charts, understand that when a move is in your favor, you would prefer, at least I certainly would, for that move to be occurring on the most amount of volume possible. Why? That gives us the largest possible sample size to work with, to back up with data that the market agrees with us. Like, for example, when you see really low volume pullbacks compared to the volume on a pump in a particular name, a lot of times if you zoom out and look at like a longer time frame, right, let's assume we're looking at a daily chart. A lot of institutions will buy really low volume pullbacks because the pullback is occurring with a tiny sample size, a sliver of the volume that the pump occurred on. A very common strategy. That can also be applied to most other time frames. It's not just on a macro scale that funds and institutions will use that on, of course, working with the amount of capital that they are. So if you're a bull looking at this 5 minute chart, looking at that volume, kind of putting these things together, you should be happy about that. If you're a bear, ideally you would have preferred to see this fade happen with at least comparable volume, because listen, we have to be contextual as well. We understand that the majority of volume happens off the open. But look here, this was immediately off the open, and then 15 minutes in, or that third 5 minute candle of the day, more so, you're starting to see volume increase on that fifth 5 minute candle of the day. It is by far the highest volume we've seen all day. Okay, so it's not always the first couple of candles right off the open that see the highest volume. So ideally, this midday fade, that is comparably speaking very low. This is a low volume fade. Okay, so if you're a bear, again, you would have liked to see a little bit higher volume on there. But at the end of the day, that big move off the open didn't hold. We ended up pulling back to around $38 a share heading into the close. Let's move on now and get some day-to-day context, looking at very popular moving averages on the 30-minute, 4-hour, and daily charts to get some things to watch as we head into tomorrow. Here on the 30-minute chart, there's something really obvious that I'm looking at here. It pops out to me immediately. See this white and gray line? That's the 50 period and the 200 period moving averages. Both of those, they came together after earlier in the week being, a bit further apart, of course. Those have now come together, forming a slightly stronger level, at least psychologically. That's what most traders are going to be considering. And the stock held both of them into the close, bouncing off the 50 period twice during the day. And then late in the day and through after hours, of course, after hours is low volume. Have to take that movement with a grain of salt. But even into the close on higher volume, we're seeing a hold. That's a positive thing to see. Now, looking ahead to Monday, tomorrow, okay, I'm going to be watching both of these from a bearish perspective. If you're looking at this, if you're a bear, you're short DWAC, whichever way you're doing that. You want to see both of these fade. You want to see DWAC get down through the 200, test the 50, get down through, ideally retest the 50 and fade off of it. But if you're a bull, one thing's on your mind. The 200 day, or the 200 period more so, currently above the 50 period, hold the 200 period ideally. And if not, just hold the 50. That's what you're thinking if you're a bull here. let's look at the 4-hour chart and take a quick peek. You can see here that these two moving averages are struggling to get up, of course, because that bull run was so aggressive. You know, these things take time to catch up sometimes on the longer time frames. But here on the 4-hour, really, guys, the first thing that I'm looking at, and really the only thing I'm looking at here on the 4-hour, you know, that 50 period is 16% away. But the recent volatile nature of this stock, that's just in the back of my mind as a potential backstop, a potential support level. You know, there's really not a lot to look at in terms of potential resistance levels, at least from an indicator perspective, other than, you know, $50 a share, maybe $40 a share we could argue is a psychological level. I will be watching 40 in the more near term. In the more midterm, $50 a share is the obvious place to watch from an upside perspective. To the downside, right around 30, 31 bucks a share. That 50 period moving average, if you're a bull, if we end up seeing a test of that, you know, obviously we'd like to hold that, stay above that level. If you're a bear, though, understand that's already a pretty big ask, 16% downside, but you want to see that thing snap and break and retest and claim it as a resistance and then fade off of that. Okay, let's move on here to the kind of granddaddy of all the charts and really look at a couple of bullish and bearish potential scenarios, what I'm looking at from both sides here tomorrow. Listen, here on the daily, pretty similar, but if you're a bull, just get above 40. You know, again, we can look at 50, but we have to get above 40 first. And while that's relevant on the 4-hour, of course, these psychological levels are relevant on all charts. So if you're a bull here looking at the daily, 40 is the next clear, somewhat psychological level, but also from a bullish perspective, hold these moving averages from the 30-minute chart. That's what you're thinking. If you're a bear, you know, again, you want to give up those moving averages from the 30-minute, work our way down to the 50 period. That's on the 4-hour. But also, you know, ideally seeing this Friday daily candle, it wouldn't hurt to see 40 reject and 35 break. Okay. Now, people interested in options or options traders who are trading them specifically, let's look at implied volatility just for context there, because this impacts the value of your contracts, whether you realize it or not. Understand that it's elevated right now. So if you bought contracts really any time in the last few months, you have experienced some IV pump that has benefited you. If you sold contracts, that has likely hurt you. You know, that's not to say that you've for sure lost or made money, but there are multiple factors that go into the pricing. Okay, so it's a net of each one thrown into a bucket. You have delta, right? You have all the Greeks. Vega is a very important one that's often overlooked. You have IV pump and then you have IV crush. Okay. If you've recently bought contracts, understand that equilibrium, we're currently above it compared to the relevant past, right? If you're looking at an option trade really any time, your intended trade time frame more so is any time in the next year, IV is presently above equilibrium. So if you bought those contracts, just understand that you run a slightly elevated risk of potential IV crush. Okay, not to say that will for sure happen to you, but we're above equilibrium, and you need to understand that if you're buying contracts while IV is elevated. And if you bought them previously, understand that that's currently benefiting you, whether you're green or red on the position. Okay, makes sense? And that being said, let's finish out here by looking at the actual sentiment of the options chain. 91,750 total contracts traded. Not a bad sample size. I like to see on DWAC, you know, I would love to see 200,000 contracts, but this isn't tiny by any means. But understand that the smaller the volume gets, the more of a grain of salt we have to take the data with. Okay, so looking here, 61,841 calls, 29,909 puts. We're seeing more than double calls than we're seeing puts, which is interesting. Now, the short-term speculation, right? The speculative nature contracts, the 0 to 20 delta, 24,148 calls, 13,904 puts. Okay. What does that tell us? Overall call put ratio leaning to the bullish side. That's what the options traders are telling us. Short-term call put ratio, those speculative gambly style 0 to 20 contracts, 0 to 20 delta contracts, I mean, right, that range, also leaning relatively heavily to the bullish side. So listen, whether it confirms your bias or goes against it, just understand that the options traders, this is a relatively bullish leaning chain. That's not an opinion, that's the data, okay? Understand that, and you can't reject data. It just is. But of course, understand as well, as with anything in the market, the masses can be incorrect. Listen, if you got value out of this video or you like DWAC stock, please leave a like on the video. Helps out tremendously with the YouTube algorithm. And think about subscribing if you want future updates here. I'll see you in the next one.